You're listening to CFRN, the Christian Financial Radio Network.
Good afternoon, traders, and welcome back to the CFRN E-Mini Futures Cast. This is the daily broadcast of Indeterminate Length, where we discuss all things E-Mini, along with some really big ideas on the finer points of trading gold, bonds, crude, sugar, the euro. Joining us today, Mr. Michael Borg. From our trading desk in Chicago, Mr. Burton Schlichter. Now, to get things started, let's go to our host and founder in Studio A, overlooking South Mountain, America's largest city park. Here's Dwayne.
Good afternoon. Welcome back. Today's Monday, 15th day of July, 2024. Thanks for joining us. Whoever you are, wherever you are, we're just glad to have you right here, right now. Hope you had a great weekend. What tragic events, but you know what? He survived. So we did have a good weekend. I'll leave it at that for now. Anyhow, we do 2 live broadcasts every trading day. Now, the first live broadcast, that's our live training room. That's where everybody learns how to use our indicators, learns our methodology, learns our strategy, etc. Obviously, that is reserved for members only, or those who take our 1-week free trial, no credit card required. To take that free trial, if you've never taken it, go to mytradingiq.com. There's a link. It says 5-day free trial, no credit card required. Just click the link, fill out the registration form, hit submit. We'll do our very best to get your desktop set up today, get your indicators indicating today, and then your 5-day free trial will officially start tomorrow. Now, you might think, well, gee, I'll only get 4 days. Not true. It's 5 consecutive trading days. So the upcoming weekend won't count against your 5-day free trial. So in reality, you get a 7-day free trial. And yes, there are some markets that trade over the weekend. Now, when you fill out that registration form for the free trial, just take a minute to get it right, because it's an automated process. If you don't fill it out right, we don't get it. You don't get the trial. Nobody wins. We want everybody to win. Okay? So it won't take you more than 2 minutes, probably a minute. But once you hit submit, you should hear back from us shortly. If you don't, send an email to support@cfrn.net and say, hey, I signed up for the trial. I haven't heard from anybody. And we'll get somebody in touch with you straight away, as quickly as we can. Now, when you take the trial, you're not just gaining access to the live training room. What's going to happen is we're going to treat you like a passport holder for 5 consecutive trading days, meaning you will have access to every resource that all of our members have access to, with the exception of one thing: the Thursday night members only workshop. The name says it all, right? Once you become a member, of course, you'll be able to attend the members only workshop, because you will be a member, and you'll have the key that opens the channel to all the archived workshops of days gone by. Now, speaking about Telegram channels, as you know, we have a number of public and private channels because I'm always talking about them. I want to clarify something. It's defined on our disclaimer page and in our terms of service, but it's important for everyone to hear this, okay? When you become a passport holder, here's what you're purchasing: software, training, one-on-one mentoring, the Telegram channels, the discussion groups we have, and the other information we provide, and the around-the-clock support. That's a value-added service. Again, as defined in our terms of service. Okay? Now, everyone who becomes a passport holder, we immediately give you access to the private discussion group channels and the other Telegram channels. However, if you aren't able to play nice with others, you will be banned from the discussion group. It's not something you pay for. It is a value-added service that we provide to those who behave when you become a passport holder. Now, if you get out of line because you don't really know the rules of the road and you're kind of new, we'll warn you. We'll probably warn you twice. We might even plead with you to behave. But when it becomes evident that you don't know how to play nice with others, you will be permanently banned from the discussion groups and the Telegram channels. Now, you'll still have access to the software, the indicators, the one-on-one mentoring, the live training room, everything else we do. Each day when the live training room ends at 11:30 a.m. Eastern, we take a 30-minute break and we come back at noon for this broadcast, which is open to the public. Everybody, everywhere on planet Earth with an internet-connected device. Now, there's two different ways you can join this afternoon broadcast live. Best way, you only have to do this once. Go back to mytradingiq.com, scroll down to where it says afternoon broadcast. Click that link. There you'll have like a 30-second registration form. And once you hit submit, you'll get access same day, instantly. But more importantly, going forward, every trading day, you'll get an email about an hour before this broadcast starts. In that email, there is a link. So at 12 noon Eastern, all you have to do is click the link in the email and it will automatically log you into our platform. Now, the benefit of that is you have access to the question box so that you can ask questions and participate in the discussion. Of course, there's going to be days you're out of the office, away from the desktop, but you still want to join live. And there'll be days when you're just busy doing something else and you can't join live, but you want to get caught up later. You can do both of those things via our YouTube channel. Now, it's easy to remember, youtube.com/CFRN. You already have the YouTube part memorized, so really all you got to remember is CFRN. Not only do we broadcast live every trading day, as we're doing right now, we're simulcasting. Not only do we broadcast live every trading day on our YouTube channel, but we also archive each and every daily broadcast. Currently, there are over 2,600 daily episodes archived for your educational and viewing pleasure. Now, if you're new to the world of CFRN, it's a great way to get to know who we really are. Not just today, not just this week, but thanks to the power of YouTube, you can actually see how we've evolved over the years. You can scroll back 6 weeks, 6 months, 6 years, even more. Obviously, you're not going to watch them all. Just pick some days at random. Watch a little bit, fast forward a little bit, jump to another day, week, month, or year. Watch a little bit, fast forward a little bit. You get the idea. Now, obviously, the more recent broadcasts are going to be more relevant to what's happening in the markets right now. But there's 8 years of history laid out there for you. From our humble beginnings, where we are today, all by the grace of God. So, I encourage you to take advantage of that resource. Okay? Even if you're not a member, you can watch any of those episodes. Here's our daily schedule. Try to begin sharply at 12 noon Eastern each and every day. The little countdown clock I have going on is PST, because that countdown clock reads the clock on your computer, and I'm on Pacific time. So, yes, while those of you on the East Coast enjoy waking up at 7 a.m. and having some coffee, reading the paper, taking a walk before the markets open at 9:30 a.m. Eastern. I got to get up at 5 o'clock to do that, because for me, the markets open at 6:30 a.m. Eastern. Now, that's only 8 months out of the year, because Arizona doesn't do daylight savings time. So for 4 months out of the year, I'm on Mountain Standard Time, but we're in that period now where I'm on Pacific time. We open with a daily devotional, a word of prayer, a bit of news. Then I get into a recap of the Logic 247 alerts and the concierge trade alerts. Then about 12:45, 12:50, Michael joins us and gives us a recap of what happened in the live trading room this morning. And then at the top of the hour, we go live on the TradingView platform, do some live trading for a half an hour, and then I come back when Michael's finished. And if I haven't finished the recap of the alerts, I will, and then I'll wrap everything up with our good word for the day. So with that said, let's get rolling. Now, I'm a little sad because we ended a devotional topic that I enjoyed so much. And you could go on YouTube if you want, and it was a 7-day devotional. It was The Chosen, Season 4. Today we're starting a new topic, the recall of heaven. I know that sounds odd, but in a minute it's going to make sense. The scripture for today is Romans 11, verses 25 through 29, and I'll be sharing with you from the Message translation. Romans 11, beginning in verse 25. I want to lay all this out on the table as clearly as I can, friends. This is complicated. It would be easy to misinterpret what's going on and arrogantly assume that you're royalty and they're just rabble, out on their ears for good. But that's not it at all. This hardness on the part of insider Israel toward God is temporary. Its effect is to open things up to all the outsiders so that we end up with a full house. Before it's all over, there will be a complete Israel. As it is written, a champion will stride down from the mountain of Zion. He'll clean house in Jacob. And this is my commitment to my people: removal of their sins. From your point of view, as you hear and embrace the good news, it looks like the Jews are God's enemies. But looked at from the long-range perspective of God's overall purpose, they remain God's oldest friends. God's gifts and God's call are under full warranty, never canceled, never rescinded. Again, Romans 11:25-29. So, why in the world would you have a devotional titled The Recall of Heaven? And this is a 5-day one, so we'll finish this whole thing this week. When a company issues a recall on a product, it's because the product, initially designed to serve a purpose, has encountered mechanical errors that render it flawed and potentially dangerous. Can you say Boeing? These errors can cause significant harm, even claiming lives. However, once the company identifies the issue, they can recall the product to correct it, restoring it to its intended perfect condition, or for sending it back to you. Just as a company recalls a product to restore it to its intended perfect condition, heaven calls us back to our unique divine design. This devotional will guide you step by step through the process of spiritual recall, where God corrects our flaws, heals our wounds, and prepares us to fulfill our purpose. Today, I want to tell you, there is a recall of heaven for your life. Look around you, meditate, and think of everything God has saved you from. He has kept you in one piece because you belong to Him. There is a recall for many of us today. God's intended purpose is a specific one for your life. Not for you to be confused, feel alone, have a lack of passion, or be lost, but to serve God's purpose in your generation. God is the appointed CEO of Your Life Incorporated. He created you as a perfect being, designed with factory settings to have authority on earth. The devil brought sin into this world, and because of this, we are born into a fallen world. But when you commit your life to Christ, the enemy is under your feet in Jesus' name, not the other way around. God made you to have dominion, placing you higher than the angels. Yet many of us live below the standard and potential we possess. Friend, I want to tell you something. You are a child of God, not just anybody. The God who created the heavens and the earth resides within you. And it's time we start acting like it. Embrace the hope and transformation that comes from answering heaven's recall. Join me in a word of prayer. Heavenly Father, come before you today with hearts full of gratitude for your wisdom and mercy. As we reflect on your words in Romans 11, we are reminded of the mystery of your plan for salvation and the enduring nature of your promises. Lord, we thank you for the inclusion of all people in your redemptive plan and for the irrevocable gifts and calling you have given us. Help us to trust in your unfailing love and to embrace the fullness of your grace. Guide us to live in unity and faith, always looking to you as the source of our hope and salvation. It's in Jesus' name, believe and pray. And everybody said, Amen. Amen. And if I may, happy Monday. Let me give you the numbers from around the world. I'm going to start here in the U.S. with the cash markets, or the indices as they're called. Okay, ready? The Dow is up 289 points. The NASDAQ is up 82 points. S&P 500 is up 27 points. But the Russell 2000, this is an unbelievable roll it's been on. It's up another 44 points today. That's over 2%. What are we up? Over 5% in just the last 2 days, I think it is. In the commodity basket, crude oil, on the other hand, is down 26 cents, which is a good thing, right? Trading 81.95 last. Gold up 17 bucks, trading 24.37.70 last. Silver up a penny, trading 31.17 last. And the Asian markets at the close, oh my goodness. Hang on, let me refresh this, because that looks like the same number as Friday. No, it's right. The Nikkei is down 1,033 points, 2.5%. What in the world's going on in Japan? I'm going to have to figure this out. Shanghai's up almost 3 points on the session. The Hang Seng fell 277 points, which is 1.5%. In the European markets at the close, FTSE down 69, almost 1%. The DAX down 157, almost 1%. The CAC down 91, over 1%. So we had a mixed day in Asia, thanks to the 2 positive points from the Shanghai. It was certainly a red day for the UK, but it's a big green Radio Monday here in the US of A. Which, let me just remind you, sets the stage for a turnaround Tuesday. Am I predicting a turnaround Tuesday? No. Just reminding you that often that's how it plays out. But we'll certainly find out tomorrow. All right, couple of news articles to share with you. We all know the big news, right? Let me just get these. I usually have them set up ahead of time. Okay. News article number 1. Now, as much as I want to dive into the political side of the things that happened this weekend. This is a financial show, so I'm going to do my best to restrain myself, but I have a special guest coming on this week, and he may not be able to restrain himself, and you all know who I'm talking about. We'll see. Okay, the U.S. Secret Service is facing harsh public scrutiny and investigations as the assassination attempt of former President Donald Trump thrusts an agency with a checkered past into the center of a political firestorm. Since Saturday's shooting at a campaign rally in Butler, Pennsylvania, Trump allies have blasted the agency over its protection of the former president. Security concerns are particularly acute as thousands descend on Milwaukee for the start of the Republican National Convention today. Although the Secret Service, a unit of the U.S. Department of Homeland Security, provides round-the-clock security to former presidents, Trump's appearances at mega rallies have posed unique challenges. Some critics have claimed the agency rejected requests from the former president's team for more protection. There are many questions, and America demands answers. Speaking on CNN today, DHS Chief Alejandro Mayorkas said he had full confidence in the leadership of the Secret Service, but said the shooting amounted to a failure. When I say something like this cannot happen, we are speaking of a failure, he said. We're going to analyze through an independent review how it occurred, why it occurred, and make recommendations and findings to make sure it doesn't happen again. This is from the guy who should have been impeached a long time ago because of... Do you feel secure in your homeland? Millions of people streaming across the southern border who have no legal right to be here? Now, we're a country of immigrants. That's how we got our start. We've always been called the melting pot in a good way. But there's a right way and there's a wrong way. And I'm going to tell you something. The immigrants in this country that went through the arduous process of doing it the right way, they're more pissed off than people who were born here. Former President Donald Trump has reconfirmed he will attend this year's Bitcoin conference in Nashville, Tennessee, following the assassination attempt. Many were concerned that he wouldn't show. Conference organizers are beefing up security for the annual Bitcoin conference in anticipation of Trump's appearance. Organizers posted on social media, "We are happy to report that Donald Trump is still committed to delivering his speech in person at Bitcoin 2024. We are proud to host him and to share the solidarity of the global Bitcoin community and our universal commitment to free speech and peaceful democracy." When's the last time you went to Macy's? If you don't live in New York, maybe you never went to a Macy's, but you know, they're the ones who, when you were a little kid, remember you on Thanksgiving Day, you'd get up and watch the parade with your family and siblings. And it was like it was a big event when I was a kid. Macy's Thanksgiving Day parade. Well, Macy's shares tumbled today after it ended discussions with two investors to buy out the department store chain, pledging to execute a turnaround plan on its own. Shares sunk as much as 16%, their biggest decline in 4 years after the company said a buyout offer from the Ark House Management Company and Brigade Capital Management wasn't an actionable proposal because it didn't have sufficient financing. Macy's decision to officially call off talks is the latest twist in a contentious saga that began with a $5.8 billion buyout offer from the investor group. That was back in December. Ark House and Brigade raised the bid to $24 in March and again to $24.80 in June, an offer that Macy's said wasn't compelling. The financing commitment letters accompanying the revised offer were also insufficient to give the board confidence, said Macy's, which concluded that further talks were not in its best interest. And so their shares have tanked. And what an institution. Man, if there's no Macy's Thanksgiving Day Parade this year, I'll be sad. Okay, Jamie Dimon, up and running. JP Morgan Chase became the first of Wall Street's 6 biggest banks to tap the U.S. investment-grade bond market after reporting second quarter earnings, opening the door for an expected flood of issuance from the firms. Biggest U.S. bank is selling bonds in as many as 4 parts, according to a person with knowledge of the matter. The longest portion of the offering, an 11-year security, may yield 1.35 percentage points above U.S. Treasuries, according to the person who, of course, asked not to be identified. The deal comes after the bank reported record profit, as investment bankers and equity traders smashed expectations, and the firm took a multi-billion-dollar gain tied to a Visa Incorporated share exchange. They have record profits, and many people in America, when they go to the grocery store, they stand and they stare at a carton of eggs. And they remember how eggs taste. But it's been a long time since they had them for breakfast. Am I blaming that on JP Morgan or Jamie Dimon? No, not directly. And of course, a representative for JP Morgan declined to comment. Wells Fargo and Company is tapping the European debt market with a $3 billion 2-part offering that just came out today. Citigroup and Goldman Sachs have also posted earnings and are candidates to sell debt. Bank of America and Morgan Stanley are scheduled to report tomorrow. The risk of a hard landing in the U.S. economy remains low. Those aren't my words. I'm reading you a news article. The risk of a hard landing in the U.S. economy remains low, which makes bonds from financial institutions attractive, according to Matt Brill, head of North America Investment Grade Credit at Invesco Limited. While Brill said this, while slowing, the economy is still strong, and when the Fed starts cutting, banks should benefit. The top banks are expected to borrow more than they usually do after they post earnings, as they take advantage of falling yields and get ahead of upcoming U.S. elections that could potentially bring market turmoil. Now, where are they going to borrow that money from? Well, the Fed has this little thing called a printing machine that goes brrr. Yeah, actually, it doesn't. Back in the day, they actually printed the money. Now they just move a decimal point on a computer. Do you and I have access to that kind of capital? Oh, no. We're just common people. Paupers and a fiefdom. God bless them. And hopefully they don't hurt anybody in the process. Okay. Now, Michael's going to be here pretty quick, so I wanted to show you this, and then I'll jump into the alerts. And, oh, I need to give you the logic recap. In fact, Valerie just sent me a new one. Okay. We had an all-time historic high, and then the following day we had another all-time historic high, and then the following day we had another all-time historic high, and now today, yeah, 1, 2, well, actually, I guess we'll start here. 1, 2, 3, 4. 5 consecutive trading days, each day putting in a new all-time historic high. Now, I know this right here looks like a double top, but the high was 57.0775, and then the high Friday was 57.0825, which made me very suspect. Today, we made it up to 57.1875. 57.1875. Let's see how close we can get. All right, I'm going to point off 4 ticks, that's all. The high is 57.1875, and I'm showing 1975. It's just kind of hard on the daily chart to get it exact, but that's okay. Where my attention is drawn is notice the resistance at the 62% fib extension. Okay? And notice that the step line is threatening to cross blue and climbing. And when that happens, we know what follows: a retracement to the BVC, which would put the market at the moment back down around here. Now, it's not going to probably all happen in a day. As price comes back down, you've got support at the step line, then blue and climbing, then the 50% fib extension, then the 38% fib extension, which was the low of the day that we put in this new high. See that sitting right on the little green line? So we have several layers of support, but price always reverts to the mean. In our case, the mean is green. It's called the BBC. You'll see it on all my charts, no matter what time frame. It stands for bull bear cross. When price crosses below the green line, we're bearish and anticipate lower prices. When price crosses above the green line, we're bullish and anticipate higher prices. But when price can go no higher, it always reverts. That's a pullback. And guess what? The pullback holds more often than not. Whether you're pulling from below, it held. Pulling from below, it held. Pulling from above, it held. And it held. We always expect it to hold until proven otherwise. But we know one thing. Trees don't grow to the sky, and neither does the market. We've not had a gut-wrenching retracement in some time. And we will, not because I'm a doomsday prophet, but because that's how markets work. All right, I forgot to show you this. I don't know if I should show you this or if I should grab the new one that just came in. I'll go. Yeah, I better do this one. Just give me a second. Valerie and I have different screen resolutions, so it's no one's fault. It's just we have different screen resolutions. So when she sends me over the recap, I have to Try to make it fit on my screen. Sometimes it's frustrating. But that's okay. All right. Logic 247. That's our 24/7 around the clock E-mini alert service. It's not just E-minis, it's also crude and gold and silver and euro and bonds. We are in week 311. In other words, it was 311 weeks ago that we completed our beta test of Logic 247 and launched the real thing. Over those 311 weeks, we've issued over 17,000 individual handcrafted alerts. And of those 17,000 plus, we've averaged on a weekly basis 20% or less being stopped out based on market structure and a very simple process we teach all of our passport holders in their one-on-one mentoring sessions. Now, since the markets opened last night at 6 p.m. Eastern, that's when we go to work, Sunday night, 6 p.m. Eastern. That's one of the things we love about futures. You know, stocks, you got to wait till Monday morning at 9:30. Futures trade around the clock. We have traders around the globe. So we've issued a total of 18 alerts. We're still awaiting the outcome of 8. So we've had 10 actionable alerts. And so far, we've had nothing stop out. Now, last week we ended up with 16%. We had 70 alerts, 6 never triggered. And when the market closed for the week, I think we still have 14, waiting to be triggered. So we had 50 actionable alerts, of which 8 got stopped out, or 16%. So again, what we've averaged on a week, now this was the first recap I got this morning from Valerie, but as you can see, I added 4 more alerts this morning. Now, let me say this. The alerts that are issued Sunday night are based on last week's weekly trading zones. Because the weekly trading zones aren't published until Monday morning at 6:15 a.m. Eastern. We've published the zones since December 14th of 2009. They come out at 6:15 a.m. Eastern on Monday, and once they come out, they're carved in stone for the entire week. They don't change in any way whatsoever. Now, we're closing in on 15 years with the weekly trading zones. Once you get to the point, if you become a passport holder, you will learn how price behaves around a weekly trading zone. And as you learn that, those zones will become one of the most important tools in your trading toolbox. Now, these logic alerts, they're not designed for you to just trade them so you don't have to learn how to trade. That would be some other company, okay? Our goal is to actually teach you how to trade, but before we can teach you how to trade, we got to teach you how to read a chart. So I use the alerts and the one-on-one mentoring sessions to teach you how to read the chart. When you started school, you had to learn to read whatever language of the country you grew up in, right? Before the teacher could teach you at more advanced subjects, you had to be able to read those textbooks. So before I can teach you more advanced things in the world of trading, you got to learn how to read a chart first. Now, many people go, oh, I can read a chart. Okay. But I'm going to teach you my way of reading a chart. The logic alerts have an entry price. They have an initial target. They often have several additional targets. and a final trade to target. So what I'm going to do in your one-on-one mentoring sessions is I'm going to teach you how to spot those areas or windows of opportunity, as I call them, so that you'll be ready to graduate to our original alert service, the concierge trade alerts. Now, they're a little bit different in a couple different ways. Whereas the logic alerts can come out at 2 a.m. or 2 p.m. because futures trade around the clock and we have traders around the globe. CTAs are published as a static report shortly after the Globex opened. Last night I got them out at 6 p.m. Eastern, right at the open. The first thing you do, now think about it, every one of our members and trial members had these targets at the open last night. First thing you do when this report comes out is you go to the 30-minute chart of the market you actually trade and make note of where price is at the time the alerts come out. It's usually more like 6:15, 6:20, 6:30, okay? But I was in a good spot yesterday. Once you make note of where price was at the time the report was published, then draw a line in the sand at the long target and a line in the sand at the short target. Those will serve as great visual cues to help you stay on the right side of the street. Price gets above the 30-minute BBC. Remember, that's the green line you saw on my daily chart? It's the same green line on my 30-minute chart. All alerts, logic, and CTAs are created on the 30-minute chart. Nothing magic about 30 minutes. Just the time frame I chose and stuck with for many years now. If price gets above the 30-minute BBC, it's attempting to reach the long target. If price gets below the 30-minute BBC, it's attempting to reach the short target. It's pretty simple. Now, this is where you prove to yourself that you actually learned what you were supposed to learn with the logic alerts. Because now you're looking left yourself to spot those windows of opportunity and learning how price behaves at a weekly trading zone. That is important because price is always trying to reach a weekly trading zone. From the moment the markets open Sunday night till they close Friday afternoon. Price is above the 30-minute BBC, it's trying to reach the zone above. Price is below the 30-minute BBC, it's trying to reach the zone below. Just resist the urge to complicate things. Do not have to reinvent the wheel. As long as you know which way the wind is blowing, it's pretty simple to reach your goal for the day. Now, the reason I show you a daily chart first, before we get into all the other markets and the 30-minute charts, is because institutional traders look at daily, weekly, and monthly charts. The way you and I look at 30-minute charts, 5-minute charts, tick charts, and range charts. Why? It has to do with account size. You see, the institutional traders have huge account size, hundreds of millions, billions, even in BlackRock's case, trillions of dollars, okay? Now, they don't put it all on one trade, but they trade in such size that they literally move price. So no matter what you trade, whether it's futures or individual stocks or crypto or Forex or ETFs, if you'll train yourself to just spend 2 minutes with the daily chart before you begin your trading session, I believe that you'll find your results will become better over time. Because what you're doing is you're literally looking over the shoulder of the guys that move markets. How cool would that be if you were invited into their office to stand and look over their shoulder? This daily chart actually gives you that opportunity. Now, we're well off the high of the day, okay? You'll notice on this day, the new high kind of stuck. I mean, it closed a little off the high of the day. But this day, we put in this new high, and we came all the way back to the step line. Next day, we ran up, but look where we closed. Closer to the low than the high of the day. And look where we are now. Yes, we've put in a new all-time historic high at 57.1875, but we're back below the 62% fib extension, which was resistance on this day, resistance on this day, resistance on this day, and it may turn out to be resistance on this day. Now, Michael has arrived, so when I come back, we're going to go through each one of the markets. We're going to go through each one of the alerts. I'm going to explain to you in detail what happened and how you can know with a high degree of probability what the next high probability move is. Nobody knows what's going to happen next in the markets, but it is possible to know, again, with a high degree of probability, what the next high probability move is. So when I come back, that's what we'll do, and then we'll wrap things up with our good word for the day.
Excellent.
Looks good.
Here we go. Good afternoon, everyone. Today is Monday. The 15th day of July, 2024. Now, if you have not taken a free trial with us and you'd like to take a free trial with us, go here to mytradingiq.com, click on the purple button right here. There is no credit card required for the trial. When you do that, you're going to be brought to this registration page where all of you ask for is your name, your email, and your phone number. Once you give us all that information down here at the bottom, there's a bunch of drop downs. Well, a couple of drop downs. There's 1, 2, 3, 4, 5 drop downs. Multiple choice questions. Down at the bottom here, if you have an InterTrader, give us your machine ID. And if you have TradingView, give us your login ID. Okay, username / login ID. That's what we need for TradingView. It's whatever you use as a user ID when you log in. All right, it's not your email address. When you look at TradingView, it's if you hover over this thing over here, it says you're logged in as something. Whatever you're logged in as, that's what we need. Okay, if you give us that information, then we can enable the indicators for you, and you can start out your trial with the indicators indicating on your desktop. All right, so today was an anomaly so far in the month. It took us 11 minutes. It took us more than 10 minutes to get the goal for the day. It took us 11 minutes today. That was because I don't think I was on my game when I started up this morning. I could have probably had it done a little sooner. I wouldn't have stopped out on that first trade, and then we would have gotten it sooner, I think. But as it was, it took 11 minutes and 3 trades to get to $1,900 to get the goal for the day. I'm to a total of 17 trades this morning. But if you're going to read the spreadsheet, you have to read all the CFTC risk disclosures down at the bottom. We made 56 ticks on the NQ and 5 ticks on the YM. That was it. We're break even on the Russell, and we didn't trade the ES. So it put us at $305 a contract on the morning session so far this month. After 10 business days, we're at $4,177, averaging $417 per contract per 2-hour business day. On the year now, $51,262 over 130 business days, averaging $394 per contract per 2-hour business day. Now, if you were to quit trading following the 24/20 blueprint, quit trading when you get the goal for the day and add 1 contract for every $2,000 in profit that you make. It'd be about 1 contract a month that you'd be adding. If you were to do that, you'd be in your 7th contract so far this year. And you would, starting with 1 contract in January, quitting when you get $100 per contract per day. So far this year, you would have worked 44.78 hours, and you would have averaged $1,490 per hour so far this year. If you did it like me, and started in January of last year. So far this year, you would be at 19 contracts. You would work the same 44.78 hours, and you'd be averaging $6,491 per hour. Okay, $6,491 per hour. So what that means is, all these days like today where it took me 11 minutes to make $1,900, Friday 7 minutes to make $1,900, Thursday 6 minutes to make $28.50, Wednesday 8 minutes to make $28.50. The 28.50s are all 30 tick trades, by the way. 30 tick trades on the 5 tick range. On a $5 per tick market. Back here, there was this big one right here, $39.90 after 8 minutes and 2 trades. If you were to play that same level of gain out for a period of 60 minutes, that's what that means. Okay, so in total, so far this month, we've worked 71 minutes, just over an hour, and in those 71 minutes, made $25,000. Quitting when we got the goal for the day. Okay. So it's actually much more than $6,000 an hour. We've worked 71 minutes, just about an hour, and at $25,000. Anyway, yeah. So let's get into the actual trades now. Okay, we get into the actual trades on the YM. We only had trades on the YM, the Russell, and the NQ. But we'll go to the YM first. Okay, YM is where we started out, and I messed up on the very first trade, I think, and it stopped me out right here. I had at least 8 ticks in profit on that. I only needed 4, but I had at least 8. I probably had 12, and somehow I managed to stop myself out. And it was minus 10 there. Then I went to break even there. Not break even there. I had a break even there. I had a break even, and then here I picked up 30 ticks on this one. It got me to 20 plus 20. I believe that's where we got the goal for the day. Then, right there. Yeah, 941. That's where we got the goal for the day. I stopped out again here. That brought me back down to 10. Then I had a break even. Then I picked something up here that I didn't write down. I had another break even. Yeah, okay, there's something missing in here. All right, let me go back here. So I stopped out on this one, and that got me down to 10. And then there was another stop out in here somewhere. I stopped out again, and it got me down to 0. And then right here, I picked up 5 ticks on this. And that got me 2 plus 5. And that's where we ended up with the NQ. I think I had a couple more break-even trades, but I ended up with a plus 5. Now, during the break, there were 2 blue arrow trades right here, right during the end of the morning session. Another blue arrow trade there, and there. So out of all 5 of those blue arrow trades, this is the only one that might have gotten you a break-even trade. All the other ones are nice wins. Okay, so the YM was a nicely tradable market today. Very nicely tradable market today. And the Russell, let's go back to the beginning of the Russell. We didn't have much happening with the Russell today, but we did have just a little bit. We had a couple of break-even trades, and there they are, right there. That was the Russell for us today. A break-even there, and a break-even there. Now, there were some blue arrows right there that worked out okay. That one I wouldn't have done going into the zone. Got away from the zone, had a push down there, a push up there. Both of those probably been break-even for me, and they were during the break. This I would not have done going into the weekly trading zone, and that was it. And the ES. We tried to do the purple arrow thing again on the ES today. And again on the ES, we were disappointed. We only had 1 purple arrow right here, and I missed it. Vortex range, purple arrow thing. We tried the whole thing again today. One of these days, it's just going to give us purple arrow after purple arrow after purple arrow. But today was not that day. All right, so the NQ is where we had the majority of the trades, so we had a few on YM too, but we'll go back to the beginning of the NQ here. And let's keep going and going and going. All right, here we are. First trade on the NQ right here, we picked up 30 ticks on that one. Right, and the next trade, that was it, 9:36. We had gotten the goal. That might have been when we got the goal. I don't know if we got the goal on that one or the one. No, I think something messed up. I think that's where we got the goal. Yeah, that is where we got the goal at 9:36 right there. Then we stopped out here, put us back down to +10. We're at +30 on the NQ there, but we're at -10 on the WAM, so it put us at +20 overall. That's how we got the goal right there. Then we had -20 right there, right? And that one, I think I should have had my stop at break even, but I'm not sure. And then we had a +4 there to get us to 14. Then a +30 right in here to get us to 44. And a break even. And a lot of nothing for a little while there. A lot of nothing. Then finally we had to stop out here. And that was a valid stop out. I got that one in the recording from beginning to end, the whole stop out right there. Ended up stopping us out pretty much to the tick and doing what I should have done. But after that, we're down to 24. And then we had a break even there and a +30 right there to get us up to 50. Oop. We had a +32 there to get us to 56. My target was not on that one, so I trailed my stop up to +32. And that was it for the morning session. Now during the break, there was one blue arrow here. Now for me, it probably would have stopped me out, but for you, it would have not stopped you out. You would have had a chance to get to break even at least, but it would have stopped me out because I would have had slippage. But in here right now, this blue arrow would have worked out okay for everyone involved. That would have been a break even, and I wouldn't have done anything after it. That would have been a stop out for me. Could have gotten it back right there and there. And do we have any more blue arrows? There's another one. Could have gotten it back there. And that was it. So that was our whole morning. Our whole morning today. So for those of you watching in the live stream, this morning, if you're going to read the spreadsheet, you got to read all the CFTC risk disclosures at the bottom. We made 56 ticks on the NQ and 5 ticks on the YM. That put us at $305 a contract on the morning session. Today it took 11 minutes and 3 trades to get to $1,900, so we took a total of 17 trades this morning. So in a month now, we're at $4,177, averaging $417 per contract for a 2-hour trading day. On the year now, we're at $51,262 over 130 trading days, averaging $394 per contract per 2-hour trading day. Now, if you were to quit trading, when you get your goal for the day and add 1 contract per month, so far this year you'd be at 7 contracts and you would be averaging $1,490 per hour. If you were to quit trading and you started in January of last year, like I did, so far this year, you still would have only worked the same 44.78 hours getting your goal, but you'd be averaging $6,491 per hour. Okay, now this number would probably be higher, or the time taken would be a lot less. If I weren't starting out with 19 contracts, if I weren't trading with 19 contracts. You know, the time to get the goal for the day. This includes all the slippage that I get with starting with 13 and moving up number of contracts. So if you started with fewer contracts, it would take a lot less time, I think, to get the goal for the day because you wouldn't experience the same amount of slippage. All right, back here now. If you have not taken a free trial, go here to mytradingiq.com and click on the purple button right there. There's no credit card required for the trial. When you click on that, it's going to bring you to this registration page where all we ask for is your name, your email, your phone number. There are 5 drop downs or 5 multiple choice questions. Fill them out. Down here at the bottom gives an indicator machine ID. And if you have it, it gives you TradingView login ID. Okay, that's what we need to set up your indicators for you. All right, do all that, and you'll be a happy trader, hopefully. All right, so let's get back into the trade right now. Okay, into the trading right now. And there's something that I wanted to see. see down here at the bottom of this. Okay. All right. All right, so I'm just going to go over here and here and here and here for right now. And see what happens. We're looking for this to pull back down and test the ribbon here. We are looking for this to pull back down and test the ribbon here while the outer band stays the right color. And this needs to change directions completely. Okay. I don't have the YouTube running here. Let me start that up over here. I believe I can do it right here. Okay, 15477. All right, so I am now watching in the YouTube live stream. If anyone there has any questions, just type them in and hopefully I will see them. All right. All right. So now we're changing directions here on the YM. You can see we're in a no trade zone there. We're coming out of the direction change here on the Russell. And what number did I say I thought we were going to get up to earlier? Anybody remember? We haven't gotten there yet on the NQ. Up here, 757. 757 is what I'm thinking on the NQ. I don't know if it's going to happen today, but it's going to happen. It's going to happen. All right. So what I'm looking for, pullbacks everywhere. We don't really have any yet. Bitcoin was on fire a little bit. Bitcoin's got a blue arrow. Okay, the NQ might give us something here coming up. The NQ, the YM, both might give us something. Still looking for that purple arrow here on the ES. We haven't gotten it yet. Remember, the thing with the purple arrow is the ribbons have to be spread. The ribbon has to be spread. If you hit the ribbon and it's spread and you get a purple arrow, then you should take that purple arrow. Right. Now, on the daily over here on the Bitcoin, what does it say Bitcoin is at right now? Down here at the bottom, Bitcoin is up $2,854 right there. If you're ever curious about that, just go hit our website, mytradingview.com, and it's on this little roller bar right here. Bitcoin's on there, Ethereum's on there, gold, Russell, Apple, what else do you have on there? Microsoft. Let's go back here. We should have a trade coming up here. Yes, we do have a trade coming up. Okay, I missed it, but it's not too late to get into it. But I missed it. Let's go back over here since I missed it. In the ES, okay, so I guess we don't have to do many things on there. They limited the number of things that I could put on there, I think. All right, back in here to trading. So there was a blue arrow here that didn't go anywhere. I did not take it. Now, I'm afraid that if it pulls all the way back down and tests the ribbon right here on the ES, that the outer band is going to turn to white. Okay. That is what I'm afraid of. And we have the blue arrow there. Where should that go? Let's click on that. Let's see. Okay, so when you crunch it up and compare it to what happened over here, See, we had the blue arrow over here. Toward the middle of it all, we had the blue arrow over here. Blue arrow over here. We never got a second blue arrow over here. But I'm thinking this blue arrow right here should push us up above this level right here. We'll see. You know, if this blue arrow does print at the end of the session, you know, tomorrow we're going to have all new numbers up here. Okay, because these numbers are based on the blue arrow printing. Right now they're on this blue arrow right here. Okay, but if this blue arrow prints, then they'll be based upon that blue arrow. Okay. All right. So the YM's got a long trade over there. I just went long on the YM. Here it is. My stop is 10 ticks away on that. Okay, 10 ticks away on that. And I'm sorry. Now my stop needs to go to break even. Sorry, I was looking at another monitor. Okay, my stop is at break even, and this should go up to right there. Reading the DOM. That should go up to right there. That's 14 ticks away. Okay, it ends up with the break even. I had another one just like that this morning. I just start locking those in. All right, I missed the Russell trade right here. Okay, I didn't get that. I missed the the NQ trade right there. The ES still, the elusive purple arrow is not going to happen because the outer band's the wrong color. Okay. There's the purple arrow on the NQ. Now, you know, a purple arrow is pretty close to a blue arrow. The difference being that you didn't come out of the overbought on the purple arrow. With the blue arrow, you have to come out of the overbought. Okay, that's what the difference is. Now, has anybody asked any questions? I've not looked in here to see if there are any questions for me. No, no questions yet. No questions yet. So the Russell needs to put in a higher swing. It's not quite there yet. The purple arrow's working there on the NQ, and that just gave 36 in profit if you took it. It's pulling back. It put in a lower swing. It's pulling back. It's almost at the ribbon. It's going to give a black arrow right here. This is one of those black arrows you wait for the pullback on. There it is. Wait for the pullback. If it's going to give one, we'll get in on that pullback. And it's not giving it. Okay. The reason I was waiting for the pullback is because it was so close to the ribbon. It did put in a lower swing. So if it comes back and bounces off the ribbon again here, this will be a great trade. Should be a great trade. The leg length needs to be just a little bit bigger to match the last leg length, but the pullback's not too deep, which is good. Okay. So get ready in there for that trade coming up. And the blue arrow that I took a break even on over here on the YM needed to put in a higher swing, so nothing after that really matters. Okay. There's the NQ, and here's the NQ, and I'm going to throw my stop at plus something. It's plus 8, and it just gave me all 30 ticks. And that was a bounce off the ribbon right there for 30 ticks. And it's pulling back again. That 30 tick target on the NQ15 range is just about perfect almost every time. It's coming up again. Get ready for it. Okay. Watch for it here. It's going to be a green arrow now. If it's going to be anything, it'll be a green arrow now. So be ready for that. There it is. Green arrow. Here it is. Stop to break even. And stop to plus 4. It should go down below the prior swing though. Whoa, did you see that? Let me cancel that. Okay. Went right through my stop on that. So we'll see what I ended up with on that. All right, it did trigger my stop, but it just looks like it took a second. Ding, 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 ding. Where is that? Gosh. All right. All right, guys, we have now on the Russell, we're looking for a pullback down to test the ribbon right here. Okay, we are testing the ribbon. We need the up close now on that Russell. All right, and up close there will be a black arrow. Nope, it's not going to be any kind of an arrow. It's not going on the oversold right there. It's just going to be a plain ribbon trade, I think. Right? Did we not hit the black line? Right, black line. Okay, so now it'll give you a blue arrow on an up close, I bet. If it doesn't hit the black line here on the pullback, it'll give you a blue arrow on an up close. Now it'd be a green arrow on an up close. If you get an up close, yeah, we didn't get the up close at all. Now it's not going to be nothing. It will be nothing. All right, nothing there. All right, the ES right now, the outer band is the right color. If it doesn't hit the black line here, we could get that elusive purple arrow. It could happen on this trade. 88.50 down to 87.50. If it closes, nope. Let's say if it closes down on this bar, it could do it, but it's so close. But it didn't happen. All right, I don't see any questions in here. Let me go out to the YouTube. Questions in YouTube. I don't see any out there. If you're watching YouTube right now, guys, I know last week Roger had asked a question, I think on Friday. If you're watching now, Roger, and you have any questions, feel free to ask. Okay. Never worry about interrupting me. We encourage the questions. If you're asking the question, somebody else is probably thinking the same thing. All right.
If you're looking for something to look at, you could look at BTC or Macy's.
Here's Bitcoin right here. Daily Bitcoin.
The Thanksgiving Day parade people, Macy's.
Mm-hmm.
They rejected a buyout order, and earlier their stock was down 18% on the day.
Really?
Yeah.
Well, let's go look at that. Let's go look at that one. That sounds interesting.
I mean, it was a $5 billion buyout offer, and I'm thinking they're gonna have some unhappy shareholders on their hands unless they can turn this thing around.
Macy's Inc. right here.
Yep, that must be it.
Ooh, yeah, look at that big
Oh
gap.
my gosh!
Look at that.
Whoa!
And we had a sell signal on it.
We did.
We had a notice back here.
Now, guys, that arrow didn't appear after the gap. It appeared on the close of that candle.
It did on the close of that candle. And there it was. And you even had a warning back here.
Yep.
Saying, get ready. Get ready. It's coming. Yeah, that's huge. So look at it on the 30-minute. Bam. Wow. Wow. Yeah, Macy's was just about out of business not too long ago, weren't they? Well, not too long ago, years ago. Didn't they claim bankruptcy? I thought they did.
You know, maybe it's not a stock I've ever followed, but since I was a wee child, I always watched that that Macy's Thanksgiving Day Parade. Yeah. I mean, that was something as a kid. Back in our day, there wasn't cable news and all these other cable channels. I mean, like right now, you can watch Wizard of Oz anytime you want. But when I was a kid, it was a once a year event, and if you missed it, I mean, there weren't even you couldn't like back it up or you couldn't record it. You either watched it or you missed it.
Yep,
it's a different world today.
It is. It is indeed. It's funny, you know, just the other night when I was trying to find Hagee for, the preacher, John Hagee.
John Hagee, yeah. I saw a picture of him the other day. He doesn't look as pretty as, well, I don't look as pretty as I once did. Let me preface it with that. Go ahead.
I was trying to set up my father-in-law's thing for yesterday morning so he could just turn his TV on. It would come right on for him.
Uh-huh.
And I was looking through all these damn channels all those darn channels that they have now, because they have Spectrum in the place where in his facility they have Spectrum.
They don't have TBN, Trinity Broadcast.
Oh, that's what I was looking for. They do. They do. But I couldn't find it. They had 300 channels I had to go through to find it. And I was going through all these darn channels, and it was just so aggravating because the remote didn't work very well. And I was like, back in our day, 3 channels. 3 channels, and you have to get up and turn it.
And then when UHF came along, it went to 4.
Yeah.
I don't know if you might be
UHF and VHF,
too young.
Yeah, I remember.
You remember?
I remember. Yeah, and you had the antenna on your roof.
You had to
crank the thing and it go.
Well, in my bedroom, I had a little small TV, black and white, and it had rabbit ears. I had rabbit ears, but when UHF came out, they gave you this little thing to clip onto your rabbit ears, so you could get the UHF.
Maybe that one, extra channel 13 or something like that, wasn't it?
And it was always fuzzy. Yeah.
All right, so Macy's took a beating today, and this is on a 2-minute chart. Didn't give any long opportunities in here on the 2-minute chart. Let's get it on a range bar. This is what, $18? Let's get it on. That's $18. We'll do it on a 10-cent bar. Let's see what it did on a 10-cent bar today. It just sells one here, one here. No opportunities for buying on Macy's today. And this was all last week. So it didn't, even a 10-cent bar, it's got like very little range. This is a lot of range for it today, apparently, moving around 10 cents at a time. This is a huge drop, obviously, from here, from $20.
For the brave and the beautiful, this could be a buying opportunity, especially if you understand the Greek of options and all that kind of stuff. Which I don't, so.
Yeah, it could be. You have to go and look at, there's a bunch of things you have to look at when you talk about options. But
yeah, it's above my pay grade.
If they're going to recover from here, that's a whole other issue. They may not. And who knows how long it'll take and what the catalyst is going to be that's going to help them do that.
Well, the shareholder revolt should cause them to take the offer that's on the table, which they said they're not going to take no matter what. So we'll see. Anyway, go ahead.
Yeah, we'll see. All right. Well, we're just waiting for a trade. We had one back here on the NQ that I missed a second ago, but it's okay. We had one over here on the Russell too. Still haven't gotten that purple arrow on the ES. I don't think we're gonna get it. I don't think we're ever gonna get another purple arrow while I'm watching. the key part of that being while I'm watching.
What's the old saying? A watched purple arrow never prints. Is that how it goes?
Yeah, that's what it is. Yeah, something like that. Something like that. And here it is. This could happen right here on an up close right here on this bar. It could happen 91.25 up to 92.25, be 92.50. My buy stop limit on. I'm ready to go. 92.50 on the ES. If it gives us the up close, it doesn't even. This has to point up. Right, the slingshot. It doesn't really matter that it comes out of the oversold. It just has to point up. In this case, it would be pointing up out of the oversold. But so right there is where the top of the bar is going to be. I'm ready to go in there. Tick right after that. See if it happens. The outer band is blue, so it should be blue on an up close. It shouldn't. And it's dealing with averages. The outer band is dealing with averages. So it's possible it could turn to white. If it turns to white, then we're not going to get a purple arrow. This is a regular ribbon trade.
So important, guys. We don't buy the pullback. We wait for the pullback and then the up close, and we let the market jump us in. Yep. Price action pulls us in.
We go with the flow once it's going again. We jump back into the flow of the market. Right. Well, it didn't do it.
See, it didn't do it. So this may, if you just bought the pullback, you might be wishing you hadn't.
You'd be stopping out right now.
Yep.
You'd be stomping out right now. Sure.
And notice that the ribbon is turned red on the ES.
Yep, the ribbon is changing color. Everything's changing color now.
Outer band just turned red.
Yep, the outer band's red. It's all going to switch right here. If we had the no trade zone on, it'd be going into a no trade zone right here, right now.
Yeah.
Okay. And the NQ just gave the black arrow. I just picked up 36 over there on that.
Nice.
Sorry, I didn't bring it over and show it to you, but I really did. Everything's turning right here. So I don't think by the end of the day that it's going to keep going down, but it does have some. Whoa, where's that price? All right, watch the NQ again right here. There it is. I'm short again right now. Here it is. Stop is good break even after 8 ticks. 8 ticks. Stop at break even. Ready to hit cancel. Because I know I have one up there. Right. So it's got my 30 tick profit target. It just hit down there. Another 30 ticks right there. 60 ticks in a row. Bam, bam.
Now, don't be shy. Just tell people how much that's worth per contract.
650, just a little under $6,000.
Now that's because you're trading 19 contracts.
19 contracts.
But if it was just one contract, it would be.
It'd be $300.
$300. There we go. So guys, you don't start out trading 19 contracts. You start out in sim, you then qualify to go live, and then you go live with one, and you only add additional with profit you earn in the market.
5,700 minus commissions, so 38 round turns to go with it. So it'd be, for me, about 5,500, something like that.
And when you're new, you get what's called the 2420 blueprint. It's a PDF that walks you through the process of how to qualify to go live, when to go live, how to add, when to add, only with profit.
There it is again, another 30 right there on the green.
Nice. Wow. This thing really is tanking.
It is. It is. And I mean, this kind of thing is perfect for the NQ and the way that the leg lengths are and everything. This is in Wednesday's lesson plan. It's the leg lengths, but it's about to give us another one. This isn't going to give us any kind of an arrow right now. No, it's not going to give us anything.
Yeah.
Almost there. But the leg lengths, everything was going great with leg lengths. This pulled back too deep. That dropped too far, so the pullback is proportional to the leg length down. And that's what happens when you get too deep of a...
And here comes the no trade zone.
Yep, too big of a move. And so now it's going to go into a no trade zone, consolidate for a little bit. And then it might give a long trade. It might not. But the way that the markets work, we are now in a down leg, right? We're in the up leg of the down leg, if that makes sense to you. When you're looking at it in a bigger picture, here's your down, here's your up, and here's more down in the bigger picture stuff. So what I was saying this morning, and part of the lesson plan this morning, it's not even in today's lesson plan, but what I was saying this morning was, when you're in a down leg like this, the bigger trend is in a down leg like this, your bias is down. Then I'm aggressive with my entries on those. Now, when it's pulling back like this, and this is the pullback in the bigger trend, you know this is the pullback. I'm not as aggressive with my entries, but I'm more aggressive with my stop. And then in here, when it starts going back in the original trend, the bigger direction, the longer term direction, I'm more aggressive with my entry and less aggressive with my stop. Make sense? Let it run when it's running.
What he just said may sound complicated, but once you've been with us a little while, it'll just be second nature. It'll just be like instinctual. It becomes part of who you are, how you think.
And all the pieces of the puzzle are right there in front of you. You just got to know what to look for. See, it's consolidating now, and it looks like it's probably not going to give us a long trade here. It's probably just going to continue down. So look at the leg lengths that we have here that we've established right now, and see if we get another one. I know I'm running over here, but I think it's worth taking an extra just a minute or two to just show. This is our leg length that we established right up in here. Okay, now you can use that right there if you want. You say we established it there. We could say we established it here.
I'm in no rush.
So we established it here. Same thing.
Take your time.
Okay. So you see how that leg length was repeated and repeated until it wasn't anymore right here. Okay, and then it got sideways. And the pullback right here is bigger than any of the other pullbacks. So this is your pullback length right here. Your pullback was 100% of the leg length down. And so now we're consolidating within that. And what I suspect is going to happen when we break out of it, we're going to break out below this prior swing low down here. And that's what we want to see, a breakout down below that prior swing low. And then we'll see if we establish a new leg length through if we just keep going with the same one. Because this is where we go with the same one right here. All right. It did get down below there right now. And this could be the new leg length right here. It could be a shorter leg length, but this is about to give us a trade right here. Okay, as it's coming together little by little here, it's about to give us a trade. Nope, it established a new leg length, which is even, well, I can use this right here. I guess we can, it's just about the same. Right here, right there. Right, nope, it's even bigger. It's gone down, right down to the weekly trading zone. I didn't see that zone down there. All right, so now we have even bigger leg length established, okay? So get ready for that. On the pullback, when it pulls back, get ready for that. All right, so we got a deep pullback right here, and that's okay because it's going to be proportional to the leg length. So it should be about half of this leg length should be the pullback, and that's just about perfect right there. So get ready for the green arrow short right now. No, it's not going to give me anything. Let's pull back too deep. Let's pull back too deep. Nope. Pull back too deep. Darn it. That's when you have an extended leg length like this, and the pullback is proportional to the leg length. It just changes on you. So sadly, it ruined all my plan. But you see this right here, this pullback is 100% pullback. So now if it does go down right here, it might give one more long trade right in here. The outer bands are going to be kind of flat on probably. So you probably want to skip it. If it does give one more long trade right here, you probably want to skip that and wait for the next one. Right? You see the outer bands are just barely spread out right here. It might give you a green arrow right here. It might not. If it drops right through, then that would be perfect really because it's 100% retracement of this leg. And then we'll see if it establishes another leg length on the way back down to the weekly trading zone here. You see how it just overran the zone a little bit right there? It looks like it's pushing right back down to it. It's not giving you that long trade at all. So I don't know what made the market get all this. Oh, I know what. There's a bond auction right now, I think, right? Aren't there some bond auctions going on?
Oh, yeah. Right, bonds fell like a rock last night when the market opened.
Yeah.
I couldn't even put out an alert. They were moving so fast.
And I think there's some kind of auction going off. So here's your green arrow right here. Okay. Now that's not a great green arrow to have. The outer bands are kind of flat. this is where you swing lows right here. It tried to put it in a long trade right there. So I'm going to skip that and wait. All right. Wait a minute. We're still in all this junk that it's doing right here. This, hopefully it's going to get out of this range. One way or the other, hopefully it's going to get out of this range. If we crunch this up, like I did a minute ago, you see we're in the down leg right here. This is a pullback in the down leg right here. It's pullback in the down leg, and it should push down some more. You might get one long trade right here. I don't think you're gonna. It's going down so deep. You might get one long trade here, but I don't think so. Had a blue arrow short on what the ES7 range. Had a blue arrow short. Now this, you see how the black line here got into the red? That disqualifies all long trades. So it came out of the red right there with that green arrow, but the outer bands are flat. You're gonna skip that. You don't want it to put it in a higher swing and pull back. You want to get mixed up in this right here.
Now you'll be so tempted to trade that, but one of the things we'll teach you over time is the patience and discipline for all the pieces to come together. Okay. Michael makes it look effortless because it's part of his instinct to be patient and exercise the self-discipline to all the pieces come together, and then there's no hesitation. Boom.
Yeah, you want to get in a trend again, and you see what we're not in right here is a trend. We're inside the range of this bar right here. Okay, and that was the range that I had just said it established as we created when it made that move down, that last move down, where it gave a little bit of a head fake to the upside, and it made that move down. This is the range that it's kind of stuck in, right? I know it got a little bit up above it right there, but that's about the range that it's stuck in. When it gets out of that range, then we'll start thinking about trading, whatever direction it goes in. Okay, but I'll be more aggressive with my entries on the short side than I will be with the entries on the long side right now.
And that's one of the beauties of futures. You don't have to learn to speak Greek. And futures trade around the clock. We've got traders around the globe, and the logic alerts come out around the clock.
Yes. Over and over and over.
If you have the misconception that most futures contracts expire worthless, that is not true. It's not even, no, that's, that can be said about options, but futures is a whole different animal than options. And you owe yourself, if you trade stocks, if you trade options, you owe yourself at least a 5-day free trial so that you can learn what futures are, how they work, how they operate. I'll spend time with you one-on-one during your trial. Michael will as well. And we want you to make a well-informed, intelligent decision at the end of your trial.
Yes, it'll be. Futures just gives you so much more opportunity. And I mean, they expire just like options do, but it's not the same thing. As you approach the end of the expiration date of futures, you don't lose time value. Time value is not priced into futures.
And the leverage is unbelievable. During the day session, you can trade one ES contract for $750 with our broker, and that gives you control over $250,000 of best of breed S&P 500 equity. And you're like, well, I don't know if I want to risk $750. We don't. We put in a hard stop at, what are you at, 10 ticks?
Yeah, $100 a contract. Well, $125 for the ES.
You got to put up $750 to make the trade. But if you get stopped out, you get stopped out for $100, and the other $650 goes right back into your account.
All right. So it's just going sideways here. It's going to have to break out of this eventually. I don't know how long that's going to take. So I guess we can pass it back out to fabulous Phoenix, Arizona. It's Studio A. We did have some really nice trades there on the NQ. That was great that we had those good legs. And this often happens after you get some great movement, it consolidates. So we'll pass it back out to you in fabulous Phoenix, Arizona. Studio A, overlooking South Mountain, America's largest city park.
Where it is currently actually a very pleasant 94 degrees.
94 degrees. That's pretty good.
Yeah.
It's about 90 here.
Recap of the morning session.
Today it took 11 minutes and 3 trades to $1,900.
great way to start a week.
It was indeed. Thank you.
Good job.
Thank you, everybody.
All right, guys, we're going to pick up where we left off. Okay, and we already covered the daily chart. And I want you to look at that big green candle where we put in the new all-time historic high. What do we got now? We got a doji. If we close today below this 50% fib extension, you got the 38% fib extension for potential support. And then your next support is down here at the daily BBC. And if we trade through that, then you're looking at support here. Oh, I blew past the 24% fib extension, which is, see, these are fib retracements. Over here are extensions. It's the same 14th century math, just applied in a different way. And yes, we will teach you how to use those on the larger time frames. I don't find them so useful on the smaller time frames. Some people do. And once I teach you on the larger time frame, you may use it on a smaller time frame if you choose. Now, for anyone that joined late, let me just point out that all of these targets, okay, that we're about to go over were published last night right at the open, 6 p.m. Eastern. All of our members and trial members had these targets right at the open, okay? So we've already talked in depth about the daily chart and why you should spend 2 minutes with it no matter what you trade, so you can see what the big boys are doing. They were buying like crazy earlier, but I did say in the discussion group, and I believe in the live training room when Michael was on break, look for resistance at 57.18. I have to go back and check my work, but I think that's what I said. It's in the discussion group, so if I'm wrong, I'm wrong. It's there. I'm not going to change it. But that was how I felt at the time. That's what I thought at the time. And, well, here we are. High of the day. 57.1875. All right. To the 30-minute charts. All logic alerts and concierge trade alerts are created on the 30-minute chart. Nothing magical about 30 minutes, just the time frame I chose many years ago, and I've stuck with it. Now, why did price stop falling here? When you have a bullish cross, that's when the blue line gets above the green line. The first time price revisits the area of the bullish cross, you should expect support. Buyers came in a little early. So if it drops a little bit further down to 56.73, 74, maybe 75, you should still expect support. You should expect support until price gets, this is what I would trade, and I think I may have an alert out on this. 56.54 to 52 to 48. Now, I haven't said this yet. These are last week's zones, okay? All the alerts that go out on Sunday night are based on last week's zones because the new zones don't come out till Monday morning at 6:15 a.m. Eastern. Now, the alerts that I've published today in the Logic channel, and by the way, on the Logic channel, we're in week 311, and we've published over 17,000 individual handcrafted alerts, and we've averaged 20% or less of the alerts being stopped out based on market structure and a simple process I teach all of our passport holders in their one-on-one mentoring sessions. Okay, so now tomorrow you'll see this week's zones on my chart, but because these targets went out last night, I still have last week's zones on my chart. And last week's highest zone was 57.10. Now, these zones were published not this morning at 6:15 a.m. Eastern, but last Monday. They're still doing their job. It's a beautiful thing. Okay. So, The market opened here last night. We opened here, and we went up a few ticks a point, and then we dropped. Okay, and we dropped to the low of Friday. See that little green candle right there? That was the closing candle Friday afternoon. We came right down to it, literally to the tick. Found support. When the market finds support, it's going to go look for resistance. Price got above the BBC, and we just rode the back. I mean, there was all of this. I mean, if you waited till here, 56.78, it's 56.88. There's 10 points right there. But price always reverts to the mean. Price rarely travels in a straight line. It always goes leg, retrace, leg, retrace, leg, retrace. The pullback to the BBC holds more often than it doesn't. But we know eventually price is going to trade through the BBC. And when you've got red and falling overhead, that's an indication that this pullback may not hold. Okay? Now, when the step line crosses blue and climbing, you expect to pull back to the BBC. But when blue and climbing becomes red and falling, then you start thinking this puppy may not hold. Okay? All right. Could you squeak in a trade from the low of the current candle to the bullish cross? I would not. No, there's just not enough room. So be patient, okay? There'll be opportunities, okay? Price will come down, and then there'll be a retracement probably to the BBC, and then a final drop down to this low from Friday. There's potential support there. Write it down, 56.60, potential support, okay? And then the short target is based off this bullish cross. And then you've got the zone, which again is from last week. Okay, these targets were published last night. The new zones didn't come out till this morning at 6:15 a.m. Eastern. We put them out that early on Monday morning so that our traders can get them on their charts before Wall Street even wakes up for the week. The Dow. We closed the week above the highest weekly trading zone last week. Is that unusual? Kinda. I mean, we're closing in on 15 years of publishing the weekly zones. And there have been a handful or maybe a couple of handfuls of weeks over the 15 years, 14 and a half years, where price on any given market may have closed above the highest zone or below the lowest zone. But more often than not, 9 times out of 10, on each of these markets we're walking through, price will close the week inside the zones. Okay, so we got a little double bottom going on here on the Dow. We spiked this low, but then we pulled back up. Now here's the bullish cross you want to be watching for. So from 4420 to 4400, go for the day. And then down to 4360, you should expect support right there at the bullish cross. If we get below the bullish cross, and we very well may, then you want to look here, potential support. And you've got potential support here. I guess I was a little bit off on that zone. Should have been maybe a tiny bit higher. But once I publish it, that's the deal. Now notice up here, we don't have red and falling yet the way we did on the ES. And this candle is still touching the BBC. See that little bitty wick touching it? So what we want to see, we're going to get a new candle in 10 minutes, 9.5 minutes. We want to see a candle open and close below the BBC, then it's on like Donkey Kong to the downside. Okay? All right. To the Russell, which is look where the Russell has come. Now, this was back on July 11th. Okay, what's today, the 15th? On the 11th, we were down at, look, we consolidated almost the whole session at the weekly zone. And then we took off from 2069, and we've gone all the way to 2219. 2 points is $100. Here's where we opened last night. We're above the BBC. We have blue and climbing, so we're only thinking long. And so, I mean, this candle opened at 21, we'll call it 73, and ran up 4 points to the target and exceeded the target. But see what it did? It did a leg and a retracement. The pullback held. We consolidated for 1, 2, 3, 4 candles, 5, I don't know, times 30 minutes per candle, to a couple hours. Okay, patience. Gotta have patience. Then this was the 9:30 Wall Street opening candle, and boom, ba-boom, bada boom, bada bing, and the step line is now crossing blue and climbing. So we expect a retracement to the BBC. Does that count? No. When we talk about a retracement to the BBC, we're talking about actually pulling all the way back to it. See, it held here, it held here, it held here. Even though we spiked it, every one of these candles was touching. And this was what I call the perfect stack. Price, step line, blue and climbing, BBC. Now, let's just say you were along this whole move. Now, we teach you to get 2 points a day and put the mouse away. All right. So a lot of this, if you first, you need to learn the mechanical model. You need to learn to get 2 points a day, or $100 per contract based upon whatever market you trade. If you decide you want to go beyond the mechanical model and learn a discretionary method, I will teach you that, but only after you've mastered the mechanical model and the logic 247 alerts. Okay? Otherwise, I'm just going to confuse you, and there's enough people out there trying to do that to you already. Okay? So, step line crossing, be patient, let price pull back to the BBC. Now, by the time price gets to the BBC, if blue and climbing is hooked over and turned to red and falling, it might not hold. Now on this one, because we consolidated at the zone so long, we did get red and falling, but we never got the bearish cross. In other words, the red line never crossed below the green line. Okay? All right. And there was never any reason to think about trading to the short target because we never got below the BBC. We spiked it, but we never actually got below it. So, and you wouldn't have entered until down about here, because you got to get below this support and this support and this support. Then you got a beautiful area. It's like 9 points down to the target. Takes 2 points to get your goal for the day. NQ. During the broadcast on Friday, price was, this is when the broadcast starts, so it was probably during this area right here, as we were going through the charts, that I drew in this little orange horizontal line up here. And I said, I think that's potentially the high of the day. And what was I basing it off of? That high right there from the previous day. See, the vertical line separates today Monday. This is Friday. This is Wednesday. This is Tuesday. When price drops to a zone, we expect support till proven otherwise. 70% of the time when price encounters a zone, you'll get consolidation. 20% of the time, you'll get rejection. 10% of the time, you'll get the slice. Now, this was a big red candle that sliced through the zone on the 30-minute chart. But when it ran out of steam, it retraced back to the zone it sliced through and continued in the direction of the slice, which led to another zone where you got that 70% of the time consolidation. This is what I mean when I talk about learning how to read the chart. Every chart tells a story. Now, I've been an avid reader since I was a kid because when I was 12 years old, I weighed 159 pounds and nobody wanted to play with me because I wasn't very good at sports. So I kind of lived the fantasy world. I read a lot. Wherever you found me. In my bedroom, the living room, the bathroom, the back of the car, I had my nose in a book. Okay? I loved to read. In the financial markets, it's not letters and words and sentences and paragraphs. You have to learn to read what the market is telling you. And every chart tells a story. And I look forward to each new day as I get to go to each chart and see what story it's telling. And once you've been with us for a little while, you should be able to look at a 30-minute chart and instinctively know what the next high probability move is. Now, if we use the Logic 247 channel as an example, with over 17,000 alerts, on average, on a weekly basis, 20% or less get stopped out. Okay? So you do your best work, you do your best analysis, you get stopped out. Stop kicking yourself. Professional traders get stopped out all day long. Do they go Googling for some new indicator or oscillator or filter or guru? No. Because they know how to read. They just realized that that was one of the trades that did not do the next high probability thing. That will happen. There are so many factors that influence the price of any market. No one can ever create a holy grail that will prevent you from ever being. The only way to never get stopped out is to never trade. And that's the honest truth. Okay? Let's say the market's climbing. And let's say Goldman Sachs is on the bid, Morgan Stanley's on the bid. We're talking hundreds of ES contracts. And then for some reason, something on their expensive news feed, or that little box they have, all of a sudden they yank their bids. How are you going to, what indicator could possibly foretell that? A crystal ball? Well, come on. So, when it comes to trading, it's not about whether or not you're going to get stopped out. You will get stopped out. What matters is how you handle getting stopped out. You see Michael every morning, he gets stopped out. Does he bang his head on the desk or kick and scream? No. He instinctively goes and looks for the next high probability opportunity where all the pieces come together. And if you're going to trade for a living, trust me, friend, you're going to have to learn to do that too. First, you're going to learn to read the chart. Then you're going to learn how to trade. And then you're going to walk. Then you're going to crawl before you walk, before you run. Now, that's the truth about trading. I know a lot of people out there blow a whole lot of smoke up your chimney. Trust me, as long as you're depending on somebody else to tell you when to get in the market, you'll never trade for a living. Now, if they're telling you or showing you where to get in, okay, but explaining and teaching you why that's the proper entry and why that's the proper target, as I do with the logic alerts for you when you become a passport holder, that's a whole different ball of wax. So right now, what do we expect? Consolidation. Till when? Till price starts dropping. Why do we expect price to drop? Because we got red and falling overhead. We're below the BBC. We're sitting on last week's support. But we also know that if price starts dropping, there's potential support there. There's a double bottom right there. A low on Friday, last night's initial low. You got to let price get below that. 24.93 down to 24.63. That would be 30 points at $20 a point, or $600 per contract traded. Once you earn the right to trade 10 contracts, it's a $6,000 trade. With one contract, it's potentially $600. But again, we teach you to make your goal for the day and then have the discipline to put the mouse away. Over time, in the beginning, it doesn't make sense. Whatever previous business you're involved with, you may have been a captain of industry. I mean, you just nailed it. Built an incredible company, sold it for an amazing profit, and you're just fat and happy. Okay? The business of trading is counterintuitive to everything you ever learned about running a business in the regular business world. And that's what this is. This is a business. Okay? This is your trading business. And the more you treat it like a business, the more it's going to behave like a business. In that 24/20 blueprint I mentioned earlier, along with it getting you ready to go live and telling you when it's time to add another contract with your profits and all that, it also walks you through creating your business plan and your trading plan. No business can survive without a business plan and an operational manual. Nobody else tells you that, do they? We not only tell you, we show you how to do it step by step. And when you've completed it, we'll review it for you and recommend any changes that we think might be appropriate. Okay, so that's the NQ. Crude oil. Okay, last night at the open, crude popped up to this high from Friday. We're below the BBC, so what do we really expect the market to do? Exactly what it did. Dropped right to the target. Now when the market finds support, now this support, is that from Friday? No. Remember, this is Monday, this is Friday, this is Thursday. So this low was established last Thursday. Did anybody ever teach you to read a chart like that before? Maybe they did. I don't know. If you remember, you already know. So when the market finds support, what's it going to do? Go look for resistance. Pull back holds more often than not. We consolidate at the BBC, we make another drop, and we get about halfway down this move, maybe better than halfway. Buyers come in. They bid it up. But are they able to take out the opening high from last night? No. And they tried one 30-minute candle, two 30-minute candles, three 30-minute candles. That's a sign of weakness. Okay? A high, a lower high, a lower high, and a lower high. That's what's called a trend. So we get below the BBC, we pull back, and the pullback holds. This is resistance times 2, because we pull back to the BBC and the zone. See, when price moves up to a zone, we expect resistance. Now, I know these are last week's zones, but that's the power of the zones. Here it is Monday, and they're still working. I hope that sinks in. So then we drop back to support, okay, which I could scroll left and show you why. But if you really want to learn how to trade, you'll do it yourself. Support sends us to resistance, sends us back to support, back to resistance, back to support, over and over again and again. It's a never-ending cycle. The market's always building legs in one direction or another. Leg retracement, leg retracement, leg retracement, leg retracement, leg, and we fail to put in a higher high. See that? That's your first indication that the market could be headed lower. Now, you don't immediately short the market just because of that, but you're getting ready, because blue and climbing's already turned to red and falling. You just need price to get below the BBC. And look at this window here. Okay, once price took out that low at 83.10, it's $100 per contract traded. That from 83.10 to $83. It's $100 per contract traded. That's what we teach you. But as you add contracts, when you add your second contract, that same move's $200. And then when the blueprint tells you to add your third contract, that same move's $300. About a year down the road, when you're up to 10 contracts, it's $1,000. From support to resistance to support to resistance to support to resistance to support to resistance. Over and over, again and again. Never-ending cycle. Last night we opened and immediately dropped below the BBC. Now, we weren't trying to get to the short target, because first we got to clear this zone. Okay? What do? We consolidated for hours. Then just when it looked like we might make a run higher, but notice we never got the bullish cross. Oh, well, we did over here, and then it immediately rolled over and turned red. Okay? So, this support, look at Friday. Okay? So, if you were coming out of this zone and you shorted it and you got stopped out, well, as I just said, that's what trading's all about. You will get stopped out. You just got to have more profitable trades than non-profitable trades. It's a job. It's a work of art. You got to show up. You got to do the work. You got to ask the questions. And then you have to exercise patience and self-discipline. Let's build a leg. Let's pull back to the BBC. Let's build another leg. Let's pull back to the BBC. Now we've pulled back to the BBC and last week's zone. Notice how the black step line crossed blue and climbing. That's your heads up that if you were long this move, you better get out. Now we got red and falling overhead. So perhaps this pullback won't hold. We don't know yet. If it does hold and we start printing green candles, just remember that step line's potential resistance, red and falling's potential resistance, and that high right there is potential resistance. if price drops, okay, got a bullish cross right here, 24.15. You could trade this area here, but I'd wait. I'd get below before I started shorting this market based on previous market behavior. Yeah. 24.05 down to 24.03. That's $200 per contract traded. When the price of gold moves $1, that's worth $100 per contract traded. When the price of crude moves $1, that's $1,000 per contract traded. When silver moves $1, that's $5,000 per contract traded. So everything true to form, step line cross, price pull back to the BBC and the zone from last week. It's showing support, but we've got resistance overhead. 3 layers. Silver. Last night, we opened right at the BBC. We had red and falling overhead, and it just took us straight down to the target. When the market finds support, it's going to go look for resistance. Did it go in a straight line? No, it went leg, retracement, leg. And then we consolidated that resistance. When the market finds resistance, it's going to go look for support. And there it is. From support to resistance, back to support, back to resistance, now back to support. Last but not least, the euro. We had a gap lower open on the euro last night, a pretty good size one, but we did fill it today. And there was an alert for the gap fill. So that gave us a W or a check mark in the W column. I don't like to use the word win. You win stuff at the county fair. This is a job. You go to work to earn money. Have you ever come home from work on a Friday afternoon and your wife ran up and said, "Oh, darling, how much did you win this week?" In what world does that exist? You work, you expect to get paid. And it's frustrating because in the beginning you work and instead of getting paid, you lose money. So, well, that's part of why we start you out in your demo account. And you have to put together 10 consecutive days in a row where you reach your goal in 10 trades or less. Only then will the blueprint give you the green light to go live with one contract. Because you've now proven to yourself 10 consecutive trading days in a row that you know how to make $100 a day. But probably that first time you go live, you're going to be all nervous and you're going to do the exact opposite of whatever it was that allowed you to get those 10 days in a row. You're going to call me up either angry or expressing some other emotion. I'm going to talk you in off the windowsill. We're going to look at it. We're going to dissect it. And only when you understand what happened and why will we end that mentoring session. And then you and I will stay in contact via Telegram. You'll be asking me questions throughout the trading days, sending me charts. Hey, what do you think about this window of opportunity I just drew? I'll either send you back, you missed this, forgot about that, or I'll say it looks perfect. So we dropped to the short target in short order. Support sent us to resistance at the BBC. Pullback holds more often than not. Resistance sent us to support at the target. Support sent us to resistance, back to support. Basically a double top. Not exactly. I mean, you put in like this high right here. 530. This high 540. Okay. That's nothing in the euro world. What it is a sign of weakness. And what happened? Remember red and falling? Traded through the BBC. So where are we hung up at right now? At the previous bullish cross. When the blue line gets above the green line, that's a bullish cross, okay? When you have a bullish cross that leads to an extended move, first time price revisits that bullish cross will almost always be support. Now, in this case, it's showing support. We're printing a green candle, green 30-minute candle, but we got resistance at the step line, resistance at the BBC, resistance at red and falling. So to go long here would be a counter trend trade and financial suicide. I will not teach you counter trend trading until you first master trading with the trend. I define the trend, 30-minute chart, price, and the BBC. Price is above the BBC, you'll only see me put out long alerts. When price is below the BBC, you'll only see me put out short alerts. Wow, our big bull candles got a little red showing. I'm telling you guys, I'm not predicting this, I'm just saying if we should close today below this 50% fib extension, below the step line in blue and climbing, because that's like support times 3 for this market. So if we close below it, that's a major deal. And remember, futures don't close till 5 p.m. Eastern. Stocks stop at 4, but futures keep going till 5 p.m. Eastern. And then tonight at 6 p.m. Eastern, the markets will reopen, and that's the beginning of the Tuesday session. Now, is it possible that buyers could come in and run this thing back up to the high of the day by the close? Yeah, you got to embrace all possibilities. And that's what I teach people in their one-on-one mentoring sessions. You can do your work way ahead of the market. You can take the current market structure, and if price goes higher, you can draw a little box where you're going to get in and where you're going to get out. And if price falls, you can draw a little box that shows where you're going to get in and where you're going to get out. And then you can sit back and put your feet up on the desk and wait, because price is going to do one of those two things, unless it just goes sideways all day, which does happen some days. But I don't expect a lot of sideways movement, maybe before the next Fed meeting, but with all the politics and the horrible tragedy that, Heavenly Father, we pray for our former president and hopefully future president. Father, this weekend, we came within a half an inch of a man not only losing his life, but the future of every American potentially being changed forever in a horrible way. So God, we thank you that your hedge of protection was there. And Lord, we pray that as he continues to speak this week at the RNC and these other speaking engagements he has, we pray as a community and as a nation for his protection and well-being. And his opponent, the current president, Lord, we pray that that same hedge of protection would surround him. Lord, we know there's a lot of people out there with a lot of crazy ideas and a whole lot of ammunition. Father, we believe that you're more powerful than the works of the enemy. Please, Lord, we need your help. God bless America. If you want to become a part of our little canoe club, go here, mytradingiq.com. If you have questions, call 949-42-EMINI. You can also email us support@cfrn.net. This article was written in 2006, and it hasn't changed. Many say it's gotten worse. 9 out of 10 new traders fail. Why? Because they don't have someone to teach them how to trade. We buy books, we watch videos, we buy indicators and oscillators, and we do everything that would seem like what you should do if you want to learn something. And there's nothing wrong with those things, but they're not a replacement for a living, breathing teacher, taking off trades live in real time, answering your questions, explaining every move he makes, every trade he takes, the rule behind it, while you trade along in demo, getting ready to go live. And that's just 2 hours out of the 24-hour CFRN day. Because remember, the logic alerts, they're coming out around the clock. Again, they're not just for you to trade so you don't have to learn how to trade. They're to teach you how to read the chart so that we can then teach you how to trade. As a passport holder, you will have full access to the live training room every trading day. Now, I wish I could promise you that becoming a passport holder would guarantee you would become the 1 out of 10 who succeeds. But I can't. It would be wrong. I answer to a higher authority. We're going to give you all the information and we're going to give you all the tools. Are you going to use them properly? Are you going to learn to exercise discipline and self-control? Or are you going to wait for the market to come out of a no trade zone? Or are you just going to go with your gut and pull the trigger anyway? Because you think it should go up or you think it should go down. See, we don't know. So, no, I can't promise you that as a passport holder, you'll become the 1 out of 10. But I promise you this, there's no other place on earth that is going to try as hard as we will to help you become a successful trader. Along with the live training room, you have private one-on-one mentoring, no extra charge, strategy you learn, the indicators you own as a passport holder, they're fluid across all markets and all time frames. Futures, stocks, crypto, Forex, ETF, doesn't matter. Price flows the same across all markets and time frames. Support, resistance, back to support, back to resistance, over and over, again and again. As a passport holder, you'll get the Logic 247 alerts around the clock. You'll get the concierge trade alerts when they're published each evening. Of course, you'll get the weekly trading zones every Monday morning at 6:15 a.m. Eastern. And you'll be able to attend the members-only workshop on Thursday nights. All that and so much more. Everything a trader needs. All under one roof. One low price. And don't forget the added value service. Telegram discussion groups. Every passport holder is given access. You don't pay to be in the Telegram group. You pay for the software, you pay for the training, you pay for the live training room, you pay for the one-on-one mentoring, you pay for the strategy, you pay for the indicators, you pay for the alerts. But we promise all of our members a family-friendly environment. So if you misbehave in the discussion group, we're going to correct you. And the second time, we're going to warn you. And the third time, we're going to probably threaten you. And then the fourth time, we're just going to ban you forever. You'll still have the software. You'll still have access to the training room. You'll have access to everything, even the Thursday night members-only workshop. But we will not allow you to destroy the beautiful thing we've created in Telegram. That's why we don't charge for it. It's a value-added service. Use it, cherish it, because you're not going to find it anywhere else. Time to wrap it up with our good word for the day. Friday, we talked about seeking God for direction. So let's go in a completely different direction today and try a power nap. Yeah, it's still a term. You don't hear it too much anymore, but it was big in the 80s. That's when all the cocaine wore off on Wall Street and everybody needed a power nap. Proverbs 3:24. When you lie down, your sleep will be sweet. God built specific triggers into our bodies to let us know when it's time to escape consciousness. And wise people listen to these clues. History's most notable nappers, or power nappers, include Albert Einstein, Thomas Edison, and Winston Churchill. There's a reason why your eyelids start to droop around 2 p.m. in the afternoon. The levator muscles, which constantly contract to keep your eyelids open, they start to give out and they're begging you for a break. Add a chemical called adenosine, which collects in your brain when you're awake, piles up, and makes you feel drowsy. Now, if you just had a 3-martini lunch, that's a whole different story. I'm not talking about that. So consequently, your body yearns for sleep to allow the adenosine in your brain to disperse, resulting in instant relief. A study published in the Annals of Internal Medicine confirms that people who nap for at least 30 minutes daily, 3 times weekly, are 1/3 less likely to die from heart disease. And additional research suggests that taking a nap can improve creativity and memory. Cognitive neuroscientist William Fishbein says that often during a brief nap, our brains actually keep working to resolve problems and form new ideas. That helps explain why Mozart professed to have composed music in his dreams. Studies also show that a little extra sleep can assist with weight control, which means you can lose as you snooze. Ghrelin, a hormone produced in our intestines, tells us we're hungry and triggers cravings for sweets, salty foods, and starches, all the bad stuff. However, when we sleep more, our colon stores less ghrelin, and our craving for junk food diminishes. In Scripture, Jesus not only took frequent rest breaks himself, he encouraged his disciples to follow suit. So, our good word for today is try a power nap. And that's our good word for today. Thanks so much for tuning in. Whoever you are, wherever you are, may God continue to richly bless you with his power and with his grace. And I'll see you at the bell. Oh, bell. There we go.
Remember this, there is no greater return on investment than to see a human life changed and given hope. As always, pray hard and trade safe. Any financial information discussed on this show is simply the opinion of our host, Dwayne Reeves, his co-hosts, and guests. To learn more about trading E-mini futures or to take a 1-week free trial in our live trading room, call 1-866-928-3310. 866-928-3310. Information discussed on this radio program should not be construed as a recommendation to buy or sell any security. Always do your own due diligence and consult with a licensed securities broker or financial planner before making any investment decision.